and welcome to Growth and Value Stocks. My name is James Boyd. We welcome you here on this March 11th. I don't know where you are, but it's been quite hot out here. It's going to be 70 coming up in Salt Lake City coming up shortly. In Oklahoma, it's going to be 86 next week. So I would put the skis away. Summer, here we come. So let's go ahead and hop right in. Speaking of something hot, we'll talk about a couple stocks, and we'll talk about some ones that have been somewhat cold. I want to start off by today kind of talking about some stocks, two stocks from a bearish perspective. Many of you have asked about maybe stocks technically bearish, but also fundamentally bearish as well. We'll look at, to begin with, Lulu and Adobe. So we'll hop into that first. Now, just real quick as we get started, we got Connie Hill with us in the chat. We welcome her. And also remember, you can follow her on X, and all of us coaches, we do post on X throughout the week, some educational examples and also announcements. Join us on X. Now, just real quick as we get going, remember the information here is provided for general informational purposes only. Also remember that with what we discuss, it's done for example, illustrative purposes only. Investing in stocks involves risk, including loss of principal. The examples we'll do will be on the paper money. There you go. The paper money software. And we're going to use that for educational purposes. And also remember that when we talk about examples here today, we're going to focus a little bit more on growth or the lack thereof. Now, when we talk about different types of investing, this is very important. What I found in actually doing this is a lot of people usually just latch onto one thing. They're growth investors. Or some people say, look, I'm really more of an income investor. You do not have to pick one by itself. We know during more volatile times, some investors might focus a little bit more on income. Also during volatile times, they might also focus on value, okay? If we're talking about, let's say, the market's just going up and economic data doesn't seem to really matter that much, people tend to focus on growth. So you can have different points where certain types of investing actually make more sense. I like to actually focus a little bit more on growth here today. Of course, when we talk about growth, we're talking probably more about NASDAQ Russell type stocks. We're also talking about things like technology, discretionary, and so on, something that actually is growing faster than the overall economy. Now, if we take a look at this first, I want to just bring up, I'll just show just real quick the SPX where it's at. The S&P trying to get back above that 6,800 level. Pretty much we've had some news and some tweets come out trying to telegraph to the market that maybe the end, whatever you want to call that, might be near, okay? Again, you got to wait to see that, okay? But they're trying to telegraph to the market, you know, what they think the strategy might be. The market, at least from a bearish perspective, you don't see a whole lot of bears going short, at least at this moment. If the bears are going to pack it on and try to push this market to the downside, they're at the area resistance. So if they're trying to push this thing down, they're trying to probably do it here. But the longer we stay up near this old area of support, new resistance, and you don't drop down, the greater the chance that we can go back up inside this old channel area like this drop never happened. And sometimes that's what happens with bearish moves. I know it's annoying for the bears, but that's why some people understand that news can knock the price down short term. But then when the news is over, or at least it's not continuing super negative, it could kind of bounce back inside that old channel. Now, super quick, when we actually take a look at, say, NASDAQ, NASDAQ is, the one thing we got to say about the NASDAQ is that is actually inside the old channel, okay? It never went down as bad as the Dow or the S&P 500 or the Russell, if you might add. And so Russell, Dow, S&P have some work, but it's really the NASDAQ that has actually done stronger. And you're going to see that the one that we're going to focus a little bit here today is on the semiconductors. That is the one, if we're talking about a moving average crossover, that's the one where you're starting to get a moving average crossover maybe today, okay? Now, of course, what are some stocks in them that might be getting the move? Type those into the chat, okay? So first off, let's kind of talk about some stocks that are struggling. I think this is where it's important. Now, I'm not going to spend as much time talking about bearish because most people are bullish, okay? And also, most people, when they're learning or actually investing, they're going to be doing more bullish examples than bearish. However, I do think it is worth noting from a bullish perspective, what are some companies where the investor might say, these are probably not bullish examples? So it does help a bullish investor because they might stay away from companies, and they also understand why some of these stocks go down from a fundamental and a technical standpoint. Now, take the opposite side of this is maybe someone says, well, I'm not bullish. I'd actually like to be bearish, meaning they would like to place a trade where they think the price might go down. Now, let's stop for just a second, okay? Have you ever been to like a mall or a store, whatever, and said, there's no one here? And matter of fact, I can't even, like, you go to maybe, it could be a car dealership, whatever, and you're like, wow, I can't even remember, like, I don't even know any friends that drive Honda Accords anymore. I don't even know any friends that drive Honda Civics anymore. That was like in the 90s. And it could be on whatever product it is. And so, maybe there's a lack of interest in what the company is selling. And that could actually hurt the fundamentals. It could also hurt the technicals and so on. Well, I want to take a look at just real quick a company, Lululemon. Now, if you own stretchy pants, this is not a shot at you, okay? That's not the point, okay? But I want to show you something just real quick. 3-year weekly chart. This stock at one time stretched, okay, its way to 516. Now, what's happened over time? Well, the stock, now here we are, sunk down to really 159. Now, there's what's called Porter's 5 Forces. And if you've never looked into Porter's 5 Forces, it really kind of talks about competition, that when you have something that's really strong, other companies launch into business or create something that you've actually done. And unless there's patents or something like that unique about it, where you can actually protect it, other companies might really eat away at some of those things that you were doing and take your revenue and those profits. Now, is Lululemon the only company that has stretchy pants? Of course not, okay? Now, why do I have a feeling Bill owns a pair of Lululemon? Oh, Bill, I had to go there. Okay, here we go. Now, when we're looking, we know that company technically is pushed down. We're down near this area of horizontal support. This is a stock class. So in this stock class, we go long, we buy it, we go short, bearish. Now, full disclosure, short the stock can only be done in a margin account. It's the most risky type of trade, okay? Because you borrow the shares of the stock from the broker, okay? And with that, you could actually have, you might not be able to hold on to those stocks indefinitely. If the company actually pays a dividend, the person that borrowed those shares, for example, is they have to pay the dividend of the stock if they pay one. So the short shares of stock might not be maybe the most used strategy by some investors. When I started investing, I didn't know about options, so I would short stocks. Now, the biggest actually thing is if this was a derivative class, we might pick a different strategy. Fine, okay? But I'm going to do an example of short. So first off, if we're in, let's say, in a IRA, you cannot short shares of stock, okay? You can, you might consider derivatives if you had that privilege from the broker to do those types of trades. But for our class, we're going to just focus on just going bearish the stock in general. Now, if I looked at, let's say, the fundamentals, now a couple places we can see this. We're going to go to, just real quick, analyze. We're going to go to fundamentals. So what we're kind of thinking is maybe is there some deterioration? Now, what's kind of interesting on this is if you look at, let's say, 21, 22, 23, 24, the numbers, at least if you look at earnings per share, actually don't even look that bad. So why is it going down? Sales per share, revenue over number of shares outstanding, 48, 63, 75, 85. So why is it going down? Well, this is where the fundamentals historically might have been strong, but maybe where the future, where it's going, is not as strong, meaning the growth that we saw from here to there, there to here, there to here, that growth is slowing. And when investors start to identify growth is slowing, they're thinking the top could be near. Now, so first thing we want to kind of see is not what the history has been per se, it's what is it going forward as well. The other thing that might kind of tell us that we are getting to the point where there could be some selling pressure is when you look at the margins, right? If these margins start to kind of stay flat or go down, okay, they're having to drop the prices to sell the items. Does that make sense? They're not raising the prices. They might be saying, hey, sale, 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 sale. Every week's a sale, okay? And so if they're always selling the item at a lower price, it's putting the pressure on the margins most likely. Now, you can go to Schwab.com and look at kind of the forward and kind of see where those numbers are. But let's kind of show this just real quick, okay? Now, what I want to do just real quick is, as that comes up, let's go to Schwab.com. And I want to kind of just look and see just real quick is going into the future, what are some of those numbers? Why is that stock going down? What is that forecast? Now, some of you might say, I don't know, I've never done this before. Now, I want to first explain to you, if we take a bearish position on one stock, now this is a question, does it mean that the portfolio is bearish? If we take one bearish stock position, does that mean the portfolio is bearish? And the answer is, of course not, okay? So let's say we have 10 bullish positions and one bearish one. It's just one bearish position, and we still have 10 bullish ones, okay? Now we could talk about some numbers there, but the kind of the bigger picture is one bearish position doesn't necessarily mean that everything else we've done has flipped the portfolio. Now, what I'm going to do is let's pull this up. Let's go to just real quick. We're going to type in Lulu. Now, if we type in Lulu and we click on that, what we now want to do is we want to go down to where we can see kind of the forecast going forward. And that's the key word, the forecast. Forecast doesn't mean actual. It means what do they think they're actually going to be doing from a company and an analyst point of view. If we scroll down for just a moment, okay, if we look at this, you're going to see that many companies have seasonality. Seasonality would be like example given, the company H&R Block. Tax season, I know. I don't enjoy it either, okay? I'm just saying some companies like H&R Block, you might have one quarter of the year that's the big banner quarter where they do a lot of their damage, so to say, earnings-wise, okay? So you're going to kind of see that on this, on Lululemon, it's really Christmas time, right? Now, if we scroll down a little bit more, I'm now going to go into this peers and ratio comparison. If I click on this and say show more here, okay? Now, what's kind of interesting is if we just look at kind of this table first, that growth forecast, they're at 20%. Their profit margins are at 15%. It's one of the stronger ones we see on the chart. So why is the stock going down? Well, maybe these investors think that that company is probably maybe it's a little rich. They actually don't think they can actually get to those margins. So remember, net profit margin, we're looking at trailing, historical, right? When we actually look at, when we go down here and say, what's that forecast? And let's go down a little bit more. Now, this is where you can see other companies that are not, other analyst companies, that's not us. They give their opinion, okay? And if we look at the annual growth. Now, this is where a lot of times, if someone says, well, how do I find growth stocks? You're really looking to see what are these growth numbers actually going forward, okay? Now, when you look at these numbers, and let's scroll down a little bit so you can kind of see some other numbers here, that's kind of the information we have. Financial strength at the bottom, okay? We see the profitability of growth, operating, and net. And if we actually go up a little bit, now, does every company actually give the numbers? And the answer is no. So what we're seeing on this, on Lulu, at least right now, we don't actually have numbers actually going forward on what this company could do. Now, that might be a bad sign. If a company pulls the guidance, it's kind of leaving the investors to think, wait, you want me to buy the company, but you're not giving me any idea of what you're going to do. And many investors might say, that doesn't sound attractive, okay? So when they pull the guidance on revenue, they pull the guidance, meaning they don't give it, okay? Now, does that always mean it's bad? No, okay? But the biggest thing is, if there's no real forward expectation, okay, doesn't mean it's turns actual, but on Lulu, we're not getting any of that guidance right here. Now, if we went back to this chart, let's go back to, let's say, the trade tab. If Lulu did fall through the floor, okay, let's say that support level broke. Now, if we said, is there any type of price pattern on this chart? Now, I'm not a perfect technician, okay, but let's just say, I don't know, kind of looks like maybe like a head and shoulder. It kind of looks like a couple couple shoulders, okay, left shoulder, right shoulder, and I'm going to use not the head term, I'm going to use what they say in the South, a melon, okay? And the issue is here, this being really the neckline. Now, if you look at that, there's the earnings coming up, and if they don't actually, meet the expectation at the minimum and maybe give some forward guidance, some of these stocks might try to go right through the floor. Now, guys and gals, the reason why I'm bringing this up, in the economic backdrop that we have, there's probably going to be a lot of companies where the fundamentals of the business start to slow. And if they start to slow on revenue and earnings per share, maybe dividends are flat, they pull the expectations, many of these companies could start to actually go down. So as an investor or trader, you're probably saying, I might sharpen up that tool, so to say, on how do I place stocks to the downside, technically, and fundamental signs of weakness. Now, we're going to look at two. I'm going to start with, just real quick, the Lulu. Now, the other thing I want to say here, if Lulu continues to sell the same stuff that they sell and there's no new products really coming out, well, that doesn't really excite the consumer because they already have those pair of pants. And if investors find out, do you have any new products coming out? Not same old stuff. Well, the problem with the same old stuff, people, if they already have it, they don't buy it. And so there's no bump, okay, in terms of the fundamental numbers. And it leads to typically technical sliding. Adobe is a classic example of just the same old stuff and maybe where it's becoming less relevant over time. So how do you do a bearish trade on this? Now, we're going to go to the trade tab. We are in, let's say, the margin account. If we go to the margin account real quick, you're going to now see that if we type in, first off, Lulu, you're going to see a little term here, ETB. ETB actually stands for easy to borrow, meaning the brokerage has an inventory that the investor might be able to borrow for a period of time. Number two, if we click on the ask price, we're buying. If we click on the bid price, we're selling, we're short. So if we buy 100 shares of stocks, it's going to show 100 shares on the monitor tab. But if we sell shares, it's not going to say plus 100, it's going to say minus 100. And if it says minus 100, okay, that means that this is a bearish position and you want the price to go down. Now, do we have to do 100? No. Let's say we did, example given, 50 shares, okay? Now, if we did 50 shares and we said, okay, hey, look, we're going to sell the shares at 164.73. Now, what I'm going to do in this case is I'm just going to sell it first. And if I go confirm and send, let's just double check something. We're going to click on that right there. And the reason why I want to click this is, do they pay a dividend? Because if I borrow money from the bank's going to want interest from me. Does that make sense? Well, if I borrow the shares from the brokerage, well, the person who owns the shares, they're going to want their dividend. Like at the bank, if I borrow those shares or money, they're going to want interest. Well, if I borrow these shares, I just double check. I don't have a dividend, at least right now. So if we go confirm and send, you're now going to see in this case, and by the way, guys and gals, this is very important you understand. As an educator, I don't want you only prepared for bullish markets. I mean, that would just be disaster. Sometimes you got to understand that some stocks are going to struggle. we got to do one or two of these examples to kind of get some practice here. Don't worry, I got some bullish examples coming up. But it is important. Now, a lot of times when I talk about this, they say, well, when you talk about this, it kind of comes across as negative. No, we're being positive. Positive meaning that some companies are going to struggle. And that would probably lead to those stocks technically and fundamentally eroding. So we're a realist that not all companies are going to just do it great indefinitely. Okay. Now, what I'm going to do is if I send that order, you're now going to see that if I double check that, where's that price? I'm kind of right in the middle. Now, there we go. Okay, so now what you're going to see on this, and I'm right down here at the bottom, it says -50, okay? So it says -50, and I went short right at 164.74, and we're right at 164.81. So if the price is higher than what we sold it for, then we're down the 7 cents or whatever times the number of shares, okay? So if the price goes up, then we're going to be down. If someone said, well, how do we get out of the position? We right-click, create closing order, and we're going to buy those shares back. Now, if we buy those shares back at a higher price, we lost. It's just the opposite if we went bullish and the price drops, then we lose. The price goes up, we gain. Just the opposite. Now, this is called short, okay? Now, could we put a target on this? We're going to put a target. We're going to put a bracket on this now. We're going to right-click on that line, click on OCO bracket, and what you're now going to see, so all we did there is right-click, create closing order, put a bracket on it, okay? Now, I'm telling you, in your lifetime, you're going to see a bearish market, okay? And then you're going to go back to this example and say, I didn't do my homework, so that way when the market started to go down, I wasn't prepared. I warned you, okay? Now, if you ask me, what do I like? I actually like bearish markets. That's how I started, okay? Create closing order. Okay, with OCO bracket, I'm going to put a target first. That's the stop. Now, if we go back to this chart just real quick on Lulu, I'm going to put my stop right above where the 20-period moving average line is. That 20-period moving average line is where? About 170. So if I put a stop above that 170 line, 170, add 2%. Now, 1.02 is 170 plus 2%, okay? So we're taking the resistance, 170, add the 2%. It's going to give us 173.40. Now, does that guarantee that that position is going to get filled? No, okay? This looks like a bullish position, as you'll see in just a sec. If we go up to that price or higher, it's a trigger not to sell. It's a trigger to what? Buy. So we got to make sure on this line right here that it's buy, okay? We're going to say in this case, buy those shares back. Now, how many of those shares? Well, we got 50. So we're saying if you go up, you break resistance, or you go up to that price, buy it back. Could that price be higher? Yes. Okay? Is that clear? Yeah. Trader Joe says, this is the first. I haven't seen JB short selling stock. Well, oh my gosh. Don't show everything in the class. Okay. Now, here we go. So we got a target here. Now, if you say, well, why would I actually do short selling if I only have an IRA? This seems like a waste of time for me. That's not true. Understanding short selling is actually the precursor to understanding bearish derivative trading. So if someone doesn't understand shorting stock, then I think the jump to doing bearish type of derivative trading, that's a stretch. Okay. So this is 101. Now, this nice thing is it doesn't change. Okay. Now, if I went back and said plus 100, this first row, this is going to be the target. This is where do we think the price could drop down to? So if I looked at this, and let's look at this last example, I'm going to give you Adobe as a homework assignment. Now, here's the problem. If we go back on this chart and say, James, we're at the low over the last 5 years, I don't even see a low. We might even have to kind of go back and say, is there a price target measurement? Now, here's kind of the problem is, I'm going back 10 years and I'm like, where is the low? Okay. I'm back 10 years ago, back into 2018, and the only low that we really see below there, I got about 140 or so. Now, that's also a concern for investors. If you have to go back 10 years to see like a support level, that's a little concerning, okay? I'm even going to put 145. So if you're a bullish investor and you're saying, look, we're now breaking support, and you got to go back to 2018 to see a support level, that might cause some investors to be concerned on top of that, okay? So I got a 145 target. If we go down to 145, buy it. Now, if we're at 165, we go down to 145, the price per share change is 20 points or $20 a share. How many shares do you have? You have 50. So price per share change, 20 times the number of shares, and it's about $1,000 if it can go down to that point. Now that's saying buy it at that price or less. Now here's the thing. I want you to practice this Lulu example over the earnings in the paper money account, and I also want you to practice Adobe, okay? In the next couple of weeks and quarters, we're probably going to see a number of companies where the revenues are starting to struggle, earnings per share struggling, and so on. It would be a good idea to practice at least one of these a week to get more familiar with it. Probably going to be seeing some examples of it. If we go confirm and send, now you're going to see in this case that we can go ahead and send that order. Now, and we can put that, we'll put that in. So 50 shares of stock there. Now let me just go back and put that, we said 145, and I'm gonna do dated GTC, and let me just put that stop there, 173, okay, 40, double check, yep, GTC. Okay, so there it is. Now when I put that on there, you're now gonna see that on that chart, there's a bracket on the chart. Notice that actually that stop is right above the resistance, and the stop, when you look at that, is, the target is right there, okay? Yeah, so the point I want to get across is a lot of times the market tends to be bullish. That's true, okay? But sometimes there's some companies, it's not great. And like you're kind of mentioning in the chat is sometimes you get the management of the company that really might not have a strategy that's working out that well, and the company might go down for a period of time. So as a bullish investor, you want to kind of know some of the telltale signs to look for, technically, but also fundamentally, okay? I'm going to go more into that. Now, example given of maybe a recent turnaround story is maybe Target. The second one is maybe the company Intel. Let's go to Intel for just a moment. Now, example given, Intel a number of years ago, man, they struggled, okay? Their chips that they were selling just were not really getting, Apple broke away from them, right? And go back about 10 years or so. And you're going to see that it was really in 21, Apple decided to do their own chips, and among other companies. And that company over time really went from 65 down to 25, 25 down to 15. Okay? So when your companies become less relevant and not as many people want to buy them, it just pushes down the sales. It multiplies negatively on the earnings per share. And then you go into what's called reduction of headcount, which is people. We're not talking about cattle here. I always think that's so weird when they say that, reduction of headcount. And then all of a sudden, the company has to say, look, we might have to spend a lot of money creating new products and services to try to turn around the business. Either they actually try to really come up with a kind of more product that's in line with the market, or some new technology to pump sales, okay? So you're at your company because you sell something. You're offering some type of service. Now, one of the examples that we're going to look at from a bullish perspective is Intel. Now, if we take a look at, let's say, Intel, now remember, when the market's been pulling back over, let's say, 1, 2, 3 weeks, the word diagonal resistance with a Milwaukee exit is probably going to be the setup on the chart. We said that yesterday, right? When the volatility is high, price is pulling back on the chart. Prices pulling back on the chart, where they falling down to horizontal support, probably going to start to get some divergences. You start to get some divergences on the chart, you might start to get, let's say, some bullish type of candles, piercing lines, bullish engulfing. If you can start to get those, you start to get the pressure on the diagonal resistance. Price breaking diagonal resistance, moving average cross up. I mean, this is like a chain of events, okay? Now, let's say the investor says, look, I want to try to get in the stock like Intel. Well, let's go back for just a second on Intel. Let's kind of see if we can get a little bit more idea what they might be up to. So let's scroll down for just a second. Now, if we look at the summary just real quick, and we want to make sure that we got Intel. Let's make sure that loads right there. Yeah, I'm going to take, let me go back up to here, make sure it's loading. There we go. Perfect. And now let's go back down to that bottom. I want to go back down to that table. So first thing what's kind of a little different than what we saw before was Q1, Q2, okay, Q3, Q4, okay? So different trends, right? Now, what investors really want to know is not what have you done for me in the past, okay? They don't want, that's fine, that's the past, okay? This is like marriage, okay? What you've done up until now, it's over, okay? The spouse, whoever he or she is, what are you going to do for me now? Right? Right? Work, they don't care about what you did in the past per se. It's what are you going to do for me? What? Now, in the future. Okay? Now, if you take a look at this, you're now going to see if we scroll down, if we look at the earnings per share growth forecast. Now, this is very important. You really understands this. Is this sales? No, that's earnings. If we're talking about something that's like growing in line with the economy, okay, that's literally what it is. The sales, okay, if you just said, look, boring old company, okay, sales better be going up 3% a year. Why? Well, because over time, the company is bumping up the prices of the product they're selling. Just based on inflation, the sales should be going up 3% a year. That Tahoe, that GMC Tahoe, Chevy Tahoe, it ain't staying the same price, is it? No, pump the price. So sales should be going up 3% a year if we're just saying staying in line. If you're not getting sales to probably increase 5% a year, I mean, that's kind of more like slight value. But if you're talking about growth, year over year, you're expecting to see those numbers 8 to 10%. So you're not just going what the economy is doing, GDP of the economy. 5% would be there's a little premium above what the economy is doing, and 8 to 10% sales growth. If we're talking about something that's really growing, you're really looking for probably something that's double digits. Okay, now obviously that's the sales. And we would say the same numbers if we're talking about earnings per share. If we're seeing something like 56, my gosh, hello, okay? This is why people look at these companies. Now, what are, like these companies that have 3%, 5%, this is really your staples, your utilities. Okay, now some people think these are boring. There could be a reason for boring sometimes. Because some people want that less volatility. They're not looking for the price appreciation. They want something that's more steady, okay? And maybe the company is not trying to have high growth. They're giving the money back in the form of a dividend to the investors. It's just like a meter that just goes around and round and round, and it's just clicking off money. Okay, it's not boring to the people that have money. It's only boring to the people that don't have it. Okay, and I can say that because I've been on both sides. Now, so here it is. Now, if we go show more, okay, and please tell me I'm not the only one. Now, if we take a look at this, if we scroll down for just a second, one of the things we see on this, if we scroll down to the annual growth, this is what we did not see on Lulu. Now, the earnings per share growth over the 1 year, year over year, okay, trailing 12 months, 98. This is what we're really looking for, is what is the forecast, okay? Now, you got to understand something is these quarterly earnings, this is when we kind of get to say, hey, is there any updates on what you thought, okay? Now, when we look at the forecast, example givens like Intel, earnings per share growth forecast, 1 year, 17. LRCX, 28. CLAC. The one I also want to look at is this one right here is AMAT. And when you go out farther, you know, you really get an idea. The one that actually has the biggest forecast, doesn't mean they're going to hit it, is really Intel, okay? Now, I'm going to also look at, let's say, AMAT in just a second. So much to do in 10 minutes, my gosh. Okay, now let's say the investor says, look, I want to try to buy these shares. Now, you got to remember, people bought the shares up until now based upon what the expectation was. So it's not that they met the expectation. It's do they actually meet it at the minimum, and do they maybe even exceed it? Okay. Now, if we take a look at this, we're going to right click on the chart. We're going to go buy custom. We're going to go with OCO bracket. Now, on this chart, are we going long or short? Long is language for we're buying. Then if we go buy it, example given that we have 100 shares of stock. We have 100 shares of stock. We own it. We're long. Okay. And if we take a look at this, we got a target and we got a stop. Now, I'm going to put that target right back to that prior high, and I'm going to set the stop right underneath that horizontal level right there. Okay? Now, here's the deal. When someone, I don't care if they're a trader might say, well, as a trader, I don't even look at the fundamentals. Look, I think smart investors try to stack everything on their sides. Correlation, technicals, fundamentals. You try to stack it all on your side. So even if you said I'm a short-term trader for the next 2-3 days, it's not a bad idea to actually at least say, what is this company? What has it been doing? And what is it that I'm actually buying? Okay? As many tailwinds as possible, maybe the better, okay? Now, if I take, let's say, 44.5, which is where that horizontal support level is, less 3%, it's going to be 43.16. So if I type in 43.16, that's the horizontal support, less 3%. These stops and targets there, we need to take those to GTC, okay? Now, if we take a look at this, we got a target and we got a stop. That is on Intel. Okay. Now, the one that I'm going to make mention of just real quick, and for some reason, it's not allowing me to change those to GTC. And I want to just see if I can't space that. No. So I'm going to have to confirm and send it, and I'll update those orders. But that's the order on Intel. Okay. The first trade example we did was a bearish trade example. With that, I want you to keep an eye on Adobe, okay, as well. Does that continue to deteriorate as well? The second trade was Intel, okay? Now, with this, what I'm going to do is I want to just take a quick peek at a couple stocks from a technical standpoint that might also be in that vicinity of maybe getting a bounce as well. AMAT is in that same group. AMAT fell down to the diagonal line, and AMAT got above the 10, got above the 20. That's also one that we're going to keep an eye on as well. Now, the other one that we're going to keep an eye on for maybe a potential reversal, if we went back to a stock like Tesla, you know, obviously we've had this issue with oil, right? Well, Tesla doesn't take oil, okay? Could some of these electric cars be maybe a focus here? I mean, as you get oil prices, gas prices up higher and higher, that might cause some other people to say, look, maybe I'm going to get maybe an EV car, maybe one of them. Doesn't mean their whole family drives EVs. But they might say, look, it's something I might now consider given higher prices or higher volatility of gas prices. Keep an eye on that. The other one I'm going to actually say just real quick is Google. That's also the one that kind of got beaten down. You had a crossover there so far. Keep an eye on that as an example. Now, the ones I want to kind of really go to just real quick, let's go to oil for just a moment, okay? The ones that are kind of showing a little bit different trend is number one is Valero, okay? And they've actually held up pretty well. Valero, MPC, Marathon Pete, and PSX, Phillips 66. Now, when you look at these and say, well, what do they actually do? Interesting. Let's double check. Analyze fundamentals. When I go to analyze fundamentals, I click on this, you're going to see, so first off, integrated downstream energy provider. So now you're going to see that they, 5 segments: chemicals, refining, midstream, marketing, specialties, renewable fuels. Okay. They also do natural gas, okay, processing, transportation, fracking of it, storage, all of it, okay? So if we take a look at this, what you're now going to see is they've actually had over time. Now, the one thing about, let's say, some of these energy products, man, they're volatile, okay? So they don't tend to trade at as high as a multiple on the price per earnings, et cetera, because the earnings and sales could be all over the place based upon the price and profitability of the commodity. So when we take a look at this, what I want us to kind of notice is we're going to keep an eye on, if I look at PSX, there's PSX. I want to go back to just real quick the MPC for just a moment. Now, if you look at the MPC, this has really been one that's been showing those potential flags, right, in the short term. We ran to the upside, pulled back, bounced. Ran to the upside, a higher high, pull back. Where's the pullback to? It's right around about 213 or so. Now, if you take a look at this, that area of resistance being in the short term, and that's the key word. When I say resistance, I'm talking about the last couple days here. That bottom area is right around 213. This recent pull, okay, that's about $33. $33 on top of maybe a support area of, let's say, 213. That's about 246, if my math is right. Now, if we take a look at this, I'm going to right click on this chart, buy custom with OCO bracket. Now, here's the deal. If we look at this, now remember, as bullish investors, many investors say, I want to find something that's been doing stronger than the market. The market for me means the S&P 500, a broad, diverse of sectors, okay? Unequally weighted. If we take a look at this, let's say, is MPC outperforming the sector? Put up correlation and you can see that. Now, if we take a look at this, I'm going to put that 246 price target there, 246, and underneath, what I'm going to do is take 213, which is the horizontal support level, less 2%, okay? Now, here's the deal. In more examples than not, we're going to show more bullish trades. Why? Because the market tends to go up more than it goes down. There's pockets where it does go down. But a lot of the companies, you have what's called survivorship bias, meaning the companies that don't make it typically get bought by other ones that are making it. And then the ones that are in the indexes, the sectors, are the companies that actually were the companies that made it over time that are still trending, okay? And so you got to always understand that the companies historically, we don't even talk, like coal stocks. 20 years ago, we always used to talk about coal stocks every day. I can't think about the last time we talked about coal stocks. They were bought up and now they're underneath the umbrella of some of these other energy companies. They're just a segment of those businesses now. Now, I'm going to type in 208.74. Now, from today's session, the biggest thing what I want us to take away is do not be bashful on practicing bearish trades. Do it in the paid money account. Practice it from short selling. The short selling in the margin account will allow you to kind of understand bearish derivatives. Not saying you had to do that, but the more you have an understanding of being short stock, then the bridge to understand that next step becomes less and less steep. The second thing we actually talked about is Intel. The third example we really talked about was Valero, MPC, and PSX, with the example on MPC. The other example we said keep an eye on is Google and AMAT and Tesla. Okay, so I'm out of my time here today. Remember that do not forget to subscribe to the Trader Talks channel, okay, that we have on YouTube. You can subscribe for free, have all of our content there. Also remember to follow us on X. That way you can see our educational examples that we post there throughout the day and week. And also remember that don't be bashful going to Schwab.com. A lot of great resources there as well as using the Thinkorswim platform. There's reasons to use both. Now, with that said, I'm out of my time here today. Remember with what we discussed, it was done for example, illustrative purposes only. Thank you, Connie, for answering those questions in chat. And this has been the class on growth and value stocks with a little bit more focus on growth. And if we continue to see those semis go up, I think many investors might appreciate that. We'll talk about that over the next couple of days. Thanks so much. Stay tuned for our next class coming up next. Bye-bye.